When there's a more dominant power, they impose their order, and that becomes more peaceful. But when you have arguments of how things should go, those arguments start to turn into conflicts, right? And so those things tend to happen together. That's why I refer to that as the big cycle, that dynamic. Now, that is the confluence of the money, the internal conflict politically, and the external conflict, which is what we're going through. And the problem is, I think, that people don't know the cycle. So every day we go to our sources of information and you see this latest news, but they don't connect the dots in understanding that cycle.
Closing off on this point of the bubbles, what is it that makes bubbles pop? So if we are in an AI bubble at the moment and it is going to pop at some point, what is they call it a black swan event?
There are a few of them. There are bubbles and then the things that prick the bubbles, okay? The things that prick the bubbles, typically in the beginning, something that means that I have to sell some wealth to get money. And that's usually a rise in interest rates. It could be something like wealth taxes. Something that means I'm very wealthy, but typically the tightness of money, because during that spot, there's inflation pressures and central banks decide that they want to tighten monetary policy and so on. It becomes that the amount of money that I can get by owning that debt at the higher interest rates is greater than the amount of money I could get on my equity investments. That's part of it. Also, what you see is a lot more production of stock. And what I mean by that, issuance of stock. Think of the supply and the demand. There's demand, right? And we've been talking about the demand that makes stocks go up, how we create this wealth. But there's also supply. So you can issue stock. It's very issue. There's almost nothing that's easier to produce than stock.
So if I own a company, I can just print more equity.
Yes. Today, you could probably go out and say, I'm going to make a company and I'm going to take it public. And you go to your audience and your crowd and you can say, I'm going to make stock. Okay. So it becomes when there's a market that wants stock, there's a production of stock.
And
and that supply of stock together with the other that I'm mentioning, the need for getting money and so on, causes the bubble to pop.
Are you seeing signs that we're in a bubble?
Yeah. The classic signs that we're in. And the bubble, I should emphasize, it's not a you're in a bubble or you're not in a bubble. It's a degree thing. Okay. There is also that it's in weak hands. I can look at now who is in these companies, right? And is it in strong hands or weak hands? Classic strong hands is that when weak investors, not knowledgeable investors, then put a lot of money into it, particularly if that's in a leveraged way.
In a way with debt.
With debt, or they can buy a leveraged version of that. Like there are ETFs now that are leveraged versions of the stock market and so on. And so they get into that. It's more like they're crap shooting. Okay. And then that's a sign of a bubble. So I've listed a few of those signs. Those are the major signs of those bubbles. And so that when it goes down, then you get the fear, then you get the need to raise cash, and that dynamic works its way out in the form of then the reverse happening. In other words, everything becomes cheap and everybody has the spending and the things you mentioned.